Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn & Associates with your metals market update for a wild Tuesday, the 23rd of October, 2018. We're just after 4:15 p.m. Powerful day for the metal markets in the silver and the gold. Palladium, an all-time high. Even the platinum market up $12. The lowly copper in trouble because if you saw the Chinese markets, their stock indices are again in the tank, and that dragged the market. But we were in the tank today. If you look at these lows, they're not wrong. You got as low as 24,750 in the Dow. You finished 25,244. That's almost 500 points off the low. So we had a mini meltdown during the day, and by the day's end, the market had made up a tremendous amount of that. When we go to gold on the weekly chart, you were up $8 for the week so far. That's a good gain. Markets come from 1161.40 up to 1233. It's a $70 gain. That's impressive. I want to show you something here that I should have shown you yesterday. This is what you call a pennant. Now, I yesterday told you flag. It's anything you want. I'll call it professionally a pennant. And pennants often resolve themselves to the upside, and that's what today did. So this is a breakout. What I don't want to see is getting here into that 1220 zone. If the market does that, was that a false breakout again? That becomes the question. Where could this go from here? Well, there's many ways to measure a pennant, but a common area that traders are looking for is back into that general zone if it can get its legs and keep them. Right now it hasn't. You've got a pattern in the most simplistic form of higher lows, higher highs. That's an uptrend. That's bullish. You'd have to take out 1222, the lower end of the pennant, to break that out right now. The resistance, you got up to the 100-day average, and you were able to poke over it and close over it by $3. That's impressive as well. The difference, though, in gold, and I'm going to repeat this to you, the settlement price in gold comes in at 12:30 p.m. Central Daylight Time, 1:30 Eastern Time. The stock market doesn't finish trading and settle up until 4 p.m. Eastern Time, 3 o'clock Chicago time. That's the actual stock indices, not the futures, the actual cash indices. Well, this market didn't have quite the benefit of that, and it had slipped back late in the day towards that 100-day average. The Bollinger Band, where I'm looking for another level of resistance, would be 1246. And in terms of momentum, I have that embedded reading. So now, because you have an embedded reading which is defined by me as the slow stochastic converting from overbought to locking in a trend, and that requires at least 3 days where these numbers right here are over 80. And you can see you have it. So, until the red line closes back under 80, I say the bulls are in control, buying this market on the breaks. And when you get back under 80 on a closing basis, the market is in a position maybe to challenge the 18-day average wherever it comes in. Right now, the bulls have total control. And that's really because of the slow stochastic, the pennant formation, the higher highs, higher lows. It goes on and on. When you look at GLD, it is not confirming what the futures are. You've got a lower low, higher high. You certainly don't have what I'll call a pennant. And if you look at the momentum here, do we have an embedded reading? Both numbers today were over 80. Yesterday they were over 80, and the day before. So the answer is yes. So even though it doesn't have that, as I consider slow stochastics the most important of the technical signals, until it gets under 80 on a closing basis, I say that the resistance point, which was the 100-day average, just might turn out to be the support point on pullbacks. In GDX, the market is not embedded. do not have both numbers over 80. Yes, the market rallied finally, and finally it hit the 100-day average where we were looking for the first level of resistance, at least I was, and then possibly 2062. So similar to GLD, you've got the lower low, higher high, but the slow stochastic rules the day. Until it's lost, I say the bulls grabbed control of the market. The best looking chart is still the futures. In the gold-silver ratio, as you can see, it's starting to slip, which means silver's picking up momentum against gold. And in the silver market, the market is trying to get up to that first resistance point, the 1485.90 level. It hit 1484 today. The market has held the 18-day average of closes. Today's break low was no worse than yesterday's, 1454. What's this low right here? That low's 1454. Today's low, 1454. You double bottomed there and you pop to the upside. Everything's still looking good, but you are in overbought territory. Any reading over 70 is overbought. The copper market has gone from a Bollinger Band high to low. Remember what I told you, when you get caught in these narrow Bollinger Bands, it is typical to get whipsawed around. What you want to do is look for signals as to which way might it break out of there. And that's what we're looking at. But right now, I call the market trendless. Momentum trying to point down, bias down, but you're not trending. Should the market close under the lower Bollinger Band, we'd have to see where under it. The last time it tried that, which was right here, if you'll see, you finished 274.65, just a few ticks under the lower band, and you got burned as it came right back on you. So where's very important. Just buy it's not good. In the platinum market, platinum went up today, but it wasn't overly impressive. It still has a pattern of lower highs, lower lows. Momentum isn't picking up steam. It yesterday closed well under the 18-day average, went back to it today, and got stymied at the 100. Let's assume it goes up. Even if it does, so what? 842, you take that out, you'll still have a lower low, higher high. I'm under the impression the market's caught in sideways action, but the market that's broken out again is the palladium, which has been a son of a gun trade. This is the strongest of the metal markets, and I think probably why is because where does this palladium come from? A lot of it's Russia. You know, what if they don't want to sell to the world? What if they get into this sanction thing gets out of control? That can definitely create issues. And that's why I think the palladium market, it's at least my interpretation, is so strong. Last, I look at the dollar index, which went up to the top of its Bollinger Band and magically ran into resistance, right? Did it here again today, finished down, overbought, in an uptrend, very overbought, and has hit its upside target. Now, one of the things when I do my research that I look at, and I do this daily, by the way, is I use a service called Moore Research Center. And for those of you that have gotten my metal reports, you know that you've seen their studies in this. This is where I get it, and I've been with them for, I don't know, a couple of decades, I'm guessing. They could tell you more than I can. I don't remember not being with them, okay? And I use it because I believe that certain seasonal things do happen in markets. I mean, come on, you get it this time of the year, you get harvest. Is that more or less grain? Then you get to the point where the farmer's got his harvest and he says, you know, prices, maybe they're too low, and you get what's called a harvest low. He doesn't want to sell anymore. Or the market priced in too much of a break. At this time of the year, I start looking at stock indices. How often does the market start looking at a key point at this month into year end? Those trades are there. Do they always work? It's a guarantee not, but a number of them are and have worked 15 years in a row. They call that 100% so far, the probability. Let me say this and make it clear and read my lips. Past performance does not guarantee future performance. Number two, looking at what the seasonal does doesn't mean you don't get a day like today in stock indices. Can you withstand the 500-point drop in the Dow? I'm not saying any of that. All I'm saying is it's a tool. And as a tool, I think it has a place in the market, and I think you combine it with other tools in order to use it. They also write special reports, and they're offering you a 2-week trial to this. And yes, I pay for it. I don't get it for free. And we can give it to you for free by giving us a call. You can go to our website. You'll see our carousel of free offers. Sign up for it there or click right up here. That'll take you there. I'm Ira Epstein. You have a great day. Remember, I have a webinar coming up on Thursday at 1 o'clock. It'll be a lot to talk about. I sent another group of invites today. If you don't have it in your mailbox, you're not on my list. Get hold of my staff. Take care.